What's going on, you filthy animals? Gabe here with seodorks. Somebody on Twitter said, hey Gabe, you want to do a video without your hat? So here we go. I have all my locks. Some grays coming in though. But let's go ahead and talk about this, because the title of this video is My Conviction in AMC. And I really don't care what the price action does. This number, 19.26% short interest. I'm going to hold AMC until this number reaches 0. Now, we're going to talk about a couple of things here. We're going to go into the chart, and we're really going to talk about a narrative that was never really discussed in 2021 because everybody was busy on Twitter, joining Twitter space calls, singing Kumbaya, my lord. I got nothing against Twitter. I got nothing against Reddit, but, you really have to think. Do these people really know what's happening? Shit, I don't really know what's happening. All I could focus on is what's in front of me, right? But speculation, well, when you assume, you make an ass of you and me, so let's go ahead and let's expand the chart here. Now, what you guys are seeing is the 1348 in action. Back in November 29th to be exact, the 13 crossed below the 48, which signaled a sell-off. Now currently, AMC is sitting on at about $20, and this is a demand zone. Now, where is that demand zone derived from? Well, we would have to go all the way back here, and this is in January 27th of 2021. Kind of crazy, right? Coincidence? Where AMC is sort of kind of like right back where it started. Now, I'm not here to make you feel good about shit, guys, because if AMC makes a move to the downside, then we are looking at or about $15. Now, does that matter to me right now? Absolutely not. The shorts have not covered, short interest is still elevated, and the price, it's still psychological. I'm sure you heard many of us say this time and time again. The thing is that the emotional intellect of the apes is being toyed with, right? I'm getting a lot of messages from grown men like, hey Gabe, not financial advice, but what do you think? Well, let's go back to the chart, and I'm going to tell you exactly what I think. What I think we have here is an area of significant interest. Should we bounce? Well, the $15 area becomes an area of significant interest. But I find it appealing, if you will, that the last time we had any type of signal was all the way back in November, and we're currently in January. Now, if you don't know what the 1348 is, well, check out the link to my Discord below. We created the Discord community around the 1348 EMA crossover, which has historically been the most profitable moving average crossover, period, hands down. And people are making money. Now, why did I start that Discord community? Well, it was to answer a question. Where do apes get their dry powder from? Because you see, what we're seeing on the charts is short pressure. Short volume is currently elevated at 57%, not to be confused with short interest. The thing is that we have to empower the apes with the ability to buy. And I tell you what, for those who complained that AMC was too expensive, didn't have dry powder, or, you were limited in funds and your ability to buy more, hopefully waiting on a whale or an institution. Well, a couple of things here. Your prayers have been answered. AMC now cheap enough for the everyday man. More importantly, it is a bargain. We got a lot of movies that were postponed from 2021 and are now set for the 2022 premiere. Also, we saw what enthusiasm could do for the movie theaters with Spider-Man. The thing is that what we're seeing in having the demand and supply zones plotted is we know when institutions like to come in and move the price. So we go ahead and we look at the chart and we see a couple of things. First off, this is very weak selling pressure. Also, for those who like to play indicators and who like to polarize the RSI, with 30 being oversold and 70 being overbought, well, we have an EMA average of at or about 35, which means that we should start seeing a change in fortune. Ideally, what I would like to see is the 13 EMA begin to curl up and begin approaching the 48 EMA. Now, just for historical purposes here, we see that AMC has not been below the 200 period moving average or exponential moving average since way back here, which is, again, in January. Coincidence? I don't know. You be the judge. The thing is that we've been talking about this time and time again. If you really want to understand the markets, you have to understand that the markets are cyclical. We could go ahead and jump on Reddit or jump on a Twitter space call and talk about the manipulation and this, that, and the other, right? That's all speculation. You know, as they say, when they assume you make an ass of you and me, and there were way too many narratives that were drawn up while AMC was running up and then consolidating here and then breaking through previous demand zones and now resting currently on this demand zone here. Now, demand zones can also be used as support and resistance. So this is where we want to keep our eyes. However, this is our next stop here at or about $15. And the reason why I share this with you guys is because you shouldn't fret. Again, everything happens in cycles, and the next time we're drawn a buy signal here, that's when apes need to go balls to the wall and throw your dry powder at AMC. And aside from movies, we have other catalysts, such as in March, we got the earnings. You know, we do expect AMC to have phenomenal earnings thanks to the fourth quarter. But the question is, are you going to be there when the next possible run-up happens? Now, I've always said that the chart is a painting of human emotion, and we could see that there's duress in human emotion in this area here. There was a great deal of confidence in this channel, but after that, you know, we could see human emotion playing here. Now, some would argue, Gabe, that's manipulation. And I'd go ahead and counter-argue that there were a lot of people in this play who bought too high, who maybe bought with margin, or who did the stupidest thing in the book, which now we're going to talk about. They went all in on AMC with margin, just putting all their eggs in one basket. And as a trader first and an investor second, I think that was the stupidest thing that could have ever been done. But yet it was championed within the ape community, which really didn't make any sense, which makes me feel like it was a philosophy that was purposely implanted by market makers and hedgies to debilitate retail traders. Now, I'm not going to go ahead and try to reach with this theory, but all you have to do is put on your tinfoil hat and really think about what has happened around you. You see, during COVID, the market saw a bull run unlike anything we've seen in recent times. And that did not run in parallel to what was really happening out in the street. You had a significant divergence between Wall Street and Main Street. Wait, what was going on? So let me give you a narrative that nobody's ever really talked about on how retail, not just with AMC, but in the broader market, was hoodwinked into this. You see, a 1 year time horizon is rather microscopic in the scheme of things, as most investors have a 10-year horizon. So, what happened here? Well, retail happened. Retail had a very high level expectation for AMC and pretty much every play out there, right? Enthusiasm grew for crypto, right? All that stuff. So while enthusiasm was growing in the markets, it wasn't growing on Main Street. You see, banks make money when you buy a home or when you buy a car. In fact, the way to create new money is to create debt. Now, when you take the lifeline away from the banks, the institutions, and the economy, how do you create the abundance that we've seen in the market? And again, this is a reaching theory, but for me, and I hope for you, would make a lot of sense. It's common sense. You see, if you're not buying a home and you're not creating new debt, of which banks can profit over the life of the loan, 30 years, you're probably paying what? Twice the amount of the home value. Then auto loans, literally done. Then you have supply bottlenecks, right? And scratch my head here. How are these guys making money? Where's this money coming from? Well, sure, the Fed made money cheap. Absolutely. But that wasn't enough. You still needed new money. So you had to bait retail to get into the market. No one was going back to work. The government printed over $808 billion worth of cash. Now, for me, how and why would this even make sense? You see, landlords weren't paying their mortgage because banks were forgiving them. Tenants weren't paying their rent because states were prohibiting evictions. Therefore, didn't have to really worry about that. Local and state governments were putting in place programs which would subsidize low to middle class or middle income families for things such as food stamps, etc. Then you had extended unemployment benefits, essentially a lot of benefits that weren't necessarily cash per se, but yet the federal government decided they were going to give you cash. In a time where you couldn't buy anything, there was nothing to buy. Bottlenecks, which still persist today. Which leads me to believe that this was mechanical, in which the government knew that individuals would take to the market with their $1,200 stimulus and attempt to make money. And that was actually a smart wager. You see, if you took $1,200 and you made $10,000 in crypto or playing options and you multiplied your portfolio, the government's coming for those tax dollars. But if you lost it all, it was an easy way to stimulate the mechanisms that actually move the economy, which is the banks and the institutions. It allowed for money to continue the flow to the upside. And if you would argue and say, well, I never spent my stimulus and I never invested it in the stock market, well, surely you may have it in a bank, and that bank is taking that money and lending it out. And who would they lend it out to? Well, guys who want to go ahead and manipulate the markets. So, in short, retail, we're already in here. I said 2021 made you an investor. 2022 was going to make you a trader. If we go back to the chart here, we had the sell signal. And for most who are retail, they have two options. You hold or you sell right here, right? And it's not just the case with AMC. It's the case with every equity out there. Retail, for whatever reason, is biased to the buy long side, which essentially makes you wrong 50% of the time which gives the competitive advantage to the market makers, to the institutions, to the banks, the people that oil this economy to keep it running. And for those who've joined my Discord, they're actually surprised they're making money. And it really shouldn't be a surprise. The Discord, our alerts, as you could see, our alerts work because it alerted on AMC and it alerts on pretty much every equity. They're now seeing that they can be alerted on whether they're going to buy on the long side or open a put option to the short side, which now makes retail versatile and allows you to make money. So, you could jump on Reddit, you could jump on Twitter, you can write a thesis, a doctoral thesis, or you can jump on a space call and have some sort of spiritual moment with your peers. But that doesn't change the market. The only thing that changes the market is money. And the fact that retail has been sucked dry, the fact that you've been misguided and misled to do stupid things like go all in on AMC, take out margin on AMC, leads me to believe that this was all part of the plan. And here we are. And retail needs to wake up. Because this is not fucking Sesame Street. This is Wall Street. You want change? Make change with their language. It's called money. So when AMC triggers a buy signal, us apes, we have to go all in. The whole buy and hold never made sense because it's not sustaining. That's why I always said buy, hold, buy. You see, if you're just holding, you become an inanimate object, and then you got pressure. The pressure eventually moves you. And that's what we're seeing on the charts here. So, for me, I am absolutely bullish. We have demand zones here, and I expect price action to respect these zones, to respect this zone. I also expect that the apes stop talking about what could be, might be, or speculating to be, and focus on the stock and what needs to be done. And that is, we need to buy with enthusiasm. Anyways, guys, this is Gabe with the View Dork. Enough with the fucking pep talk. I'm signing out. Peace.